just giving us the right frame for the reason why the conversation matters. So I will not go too deeply into setting the context because Naomi has really given us the reason why we're here. But I just want to point our attention to a couple of statistics and figures. So if you can share the slides, please. Okay. So just like Naomi shared, capital is moving. And if the capital sat across from organization today, if capital was a person, what would it say? Would it say a good ESG story or a finance-ready transition pathway? That is the lens that we want to look at as we go into the panel and discussions today. We see that the market is no longer only asking whether a business has just sustainability commitments, but whether those commitments can survive financial due diligence, credible data, governance, costed projects, measurable targets, and a pathway that lenders or investors can assess. If we go to the next slide, you will see the data before you showing globally what the numbers are looking like. Globally, sustainable capital is moving, as shared by Naomi earlier from the Climate Bonds Initiative reports, 6.8 trillion US dollars in aligned cumulative green, social, and sustainable bonds and debt. We saw that at the end of 2025. The International Energy Agency projects 3.3 trillion USD in global energy investments by 2025, with around 2.2 trillion going into clean energy, grids, so storage, low emission fuels, efficiency, and electrification. Coming to Africa, we also see that the Africa Development Bank is pushing a new financial architecture to mobilize the continent's institutional capital and close a major annual financing gap. It's also investing 125 million in African trade and development insurance to strengthen guarantees and insurance as de-risking tools. And recently, there was a close, they raised recently about over 112 co-financing. So the continent cannot rely only on concessional funding or traditional aid flows. AFDB is showing that as is talking about mobilizing Africa's own institutional capital, pension funds, sovereign wealth, savings, and guarantees to close the major development finance gap, which means that companies must become more investable because if the capital is available, then we need the companies to be able to tap into that. So the conversation that we're having now is happening also in Nigeria at a time where Nigeria is trying to move from climate ambition to climate finance architecture. Data from the Reuters reports on Nigeria's announcement of the 2 billion USD National Climate Change Fund and a 500 million USD climate investment platform. Nigeria also has proof points. The sovereign green bond markets, they raised the first bond in 2017, another in 2019, and more recently, the third one. And now the key issue is how to move from sovereign proof points to stronger private sector pipelines. Even on the carbon market side, we can also see that carbon markets are also becoming part of the conversation. Carbon finance, but carbon finance will not reward just ambition. It will require data, baselines, verified data, project integrity, and clear governance. So for companies, the opportunity and question to ask is, can you prove the transition value of what you're doing? If we go to the next slide, we will see that there's one point that is clear, that transition finance is not charity capital. Neither is it soft money for good intentions. But it is also not a reward for saying the right things. It is capital trying to understand risk, future competitiveness, and the commercial logic of change. So when a company talks about transitioning and we talk about transition capital, we ask very practical questions like, what exactly are you transitioning from? What are you transitioning to? What will it cost? Who owns the plan internally? What data proves your starting point? What will change in your operations? What happens if you do not transition? This is important for Nigeria, particularly because we are an emerging market and most of the key sectors, almost everyone uses energy. But most of these sectors, everyone's business is aligned to it. When we talk about energy, when we talk about cement, when we talk about transport, manufacturing, agriculture, logistics, and infrastructure, these sectors cannot become green overnight, but they can become more efficient, more resilient, better governed, and less carbon intensive about their pathway. And that is the opportunity we see that transition capital offers. So concluding this, when companies enter the conversation, next slide, the first question is, sometimes they ask, should we do a green bond? Should we look out for a sustainability linked loan? Can we access transition finance? Can we get blended capital? Those are valid questions, but they're not the starting point. The starting point is, how ready are you as an organization? For use of proceeds for the transition finance, the question is, do you have clear eligible projects that can be ring-fenced? The proceeds, can you report and validate the reports? Do you have credible KPIs that are ambitious, measurable, and linked to real business performance? And do you have a whole company transition plan, not just around energy, but also around people, that is approved by leadership, backed by your CapEx, with milestones that can be verified and tracked? So today, I hope we do not hope to discuss instruments alone. We will discuss what sits behind the instruments, because capital does not only ask, what do you want to raise? Capital also asks, what have you prepared? What evidence do you have? What risks have you identified? What governance is in place? What happens if the assumptions change? And how do we know this is not just a nice story? So this session is going to be a practical session, practical conversation. I see some questions already in the chat, so we would hear from the experts. And then after the experts are done, whilst they are speaking, if you have any questions, please use the Q&A button to drop your questions, and we will try to get to as many questions as possible in the course of the session. So now to introduce our amazing speakers, the voices who understand capital from different angles. We were very, very glad to have, very, very diverse experiences join us for this conversation from different angles across global investment, infrastructure, finance, institutional market development, and they will help us unpack these topics very, very clearly. So before we bring in the speakers, I hope we were able to get to answer the Mentimeter questions. We will try to show the responses Q&A box so that people can access. Now, moving on to calling the speakers, I would like to introduce the first speaker, Samuel Mary from Pacific Investment Management Company, also called PIMCO, which is a global investment management firm. Mr. Mary is a senior vice president and ESG research analyst in the London office, focused on the integration of ESG factors into PIMCO's portfolio management and credit research. He also leads PIMCO's research on climate change. Prior to joining PIMCO in 2018, he worked as a senior ESG and sustainability research analyst at Kepler Cheuvreux, pronounced as Chevreau. I hope I got that right, where he was responsible for the group's thematic and impact investing research products, ESG corporate access, and in-house ESG integration framework based on methodologies that integrate ESG issues within fundamentals of equity analysis for specific sectors. He has 12 years of investment experience and holds a master's degree in management with a specialization in finance from ESCP Europe. He was Extel's top-ranked individual for SRI research in 2017, based on surveys of UK asset managers. Samuel brings the global investor perspective into this conversation as PIMCO works across international markets. So his perspective will help us understand how global investors are thinking about sustainable finance, transaction risk, emerging markets, and what makes an issuer credible. Welcome, Samuel. We're so happy to have you join us. Next, we will be introducing Daniel Muela, who is the Executive Director and Chief Operating Officer at InfraCredit Guarantee. Daniel Muela is a versatile corporate finance professional with over 20 years of experience in transition, structuring, credit evaluation, project finance, due diligence, operations, project management, and capital raising. He joined the company in 2017 as one of its pioneering staff, acting as the head origination and structuring before being named the COO in 2021 and appointed executive director in 2024. He started his career at JP Morgan's investment banking division in 2000 and served as a United States Peace Corps volunteer in Togo from 2004 to 2007, then spent over 9 years in Nigeria with Deloitte, Touche, and Global Emerging Markets before joining InfraCredit. Daniel Muela holds a BSc in Economics, Finance, Public Policy from the Wharton School at the University of Pennsylvania and has passed all levels of the CFA examination. Daniel brings the local market and credit enhancement perspective, as InfraCredit's work is important because many Nigerian companies and infrastructure projects may have strong potential, but they still need the right structure, documentation, risk profile, and credibility to access long-term capital. And InfraCredit Guarantee has been pioneering that work on the continent. So we're so pleased to have you join us. Welcome, Daniel, to the conversation. And next, we also have Abraham Durosawe, who is the Vice President of the Nigeria Sovereign Investment Authority. Abraham Durosawe is a seasoned institutional investor and executive with a distinguished career spanning private equity, investment banking, and large-scale infrastructure finance. He currently serves as the Vice President at the Nigeria Sovereign Investment Authority that manages the sovereign wealth fund of the country, where he leads the industrialization thematic under the Nigeria Infrastructure Fund, driving strategic capital-intensive investments designed to capitalize sustainable economic growth and localized value addition. Prior to joining the Sovereign Wealth Fund, Abraham was the Managing Director and CEO of the ARM Capital Limited, the advisory and capital markets subsidiary of ARM Holding Company. He's a specialist in structuring complex transactions. He has successfully shared landmark debt and equity capital raises, orchestrated high-value mergers and acquisitions, and negotiated definitive frameworks for critical national infrastructure and energy projects. Abraham brings a wealth of expertise in aligning institutional capital with sustainable systemic market development and brings the domestic institutional investor perspective to the conversation. NSI sits at a unique position because it's not only investing for long-term value, it also signals to the wider market what credibly future-facing investments can look like in Nigeria. So welcome, Abraham, and I would like you all to give a warm applause to our panelists as we go into the question. If they can just